Welcome back to Count on Me. In the last two videos, we discussed about the concepts of accounting and the rules and regulations that an accountant have to follow while preparing the accounts. Today, we will be discussing about another serious concept, which is accounting equation. In the last video, while we were discussing about the rules and regulations in accounting, we came up with a concept called dual aspect concept. A dual aspect concept states that every transaction recorded in an account will have two aspects. One is debit aspect and the other one is credit aspect. Some of you may remember that while we were discussing about this concept, we named this concept as accounting equation concept. And why it is so? Let us see why dual aspect concept is also known as accounting equation concept. Accounting equation concept or accounting equation. Accounting equation is an equation which equalizes debit and credit, or otherwise assets and equities in a transaction. Now, some of you may be confused, what is equities? Equities denotes the right of any person towards the asset of the company or the entity. Yes, it is also called liabilities. Equities can be classified into two. One is owner's equity and second is outsider's equity. Owner's equity is also known as capital and outsider's equity is normally termed as liability. Thus, the accounting equation states that assets a company owns will be equal to the liabilities it has towards the outsiders or the owners of the company. Thus, the equation is asset is equal to liability plus capital. Let us see how this equation equalizes the assets and liabilities owned by an entity. We will look into this concept with some examples. Let us take a transaction. Aman started business with rupees 25,000. Now, in this transaction, which all items comes into the transaction and which will not? Let us see. Here, since Aman is starting business with rupees 25,000, there is an item called cash which is coming into the business. Now, from where it is coming? That is the question. The cash is coming into the business from Aman. Aman is the person who is giving the cash to the business. As the business entity concept, we said that every business is treated as a separate entity from its owner. Therefore, any contribution made by the owner of the business will be treated as a liability of the business towards that person. Therefore, Aman here is a person to whom the business is liable. So the second person or second item comes into the transaction is Aman. But we does not show this as Aman alone, but we will show it as Aman's capital, since this is the money contributed by the owner of the company. As I said, it is a liability. We can split the liabilities into two broad areas. One is insider liability and the other one is outsider's liability. An insider liability is the liability of the owner of the company, which is otherwise known as capital. So here, Aman, being the owner of the company, his liability will towards, or the company's liability towards Aman will be shown as capital. So the transaction will have two items, one is cash and the other one is capital. Let us look into this concept with the help of a table. The first transaction that we recorded was Aman started business with rupees 25,000. As I said, there will be two items, one is cash and the other one is capital. Cash is asset. As the definition of assets itself says that asset means cash and any other valuables owned by the company. Cash comes under the head assets. So we will show it here. So when Aman starts his business with cash rupees 25,000, the business is receiving 25,000. We will record it under the head cash. Now, since it is coming into the business in the form of capital, we should also show this amount and the capital side. So, it is equal to 25,000 in capital. So, the first transaction itself justifies the equation, which is asset is equal to liability and capital. Let us go through the second transaction. He purchased machinery for rupees 10,000. In this transaction, you can see Aman, as the owner of the business, using the capital introduced by him, purchased a machinery worth rupees 25,000. When someone purchases a machinery or any item, the first thing happens to him is the cash with him is exhausted and a new item comes into the business. So here it is evident that the cash will be reduced by a sum of rupees 10,000, and at the same time a new item called machinery, which is an asset to the business, comes into the business. Is there any change in the capital? No, the capital will not change because the capital is distributed in the form of cash and machinery. Now, let us equate this equation and form a new equation. $25,000 was the cash with the business when Aman started the business. When he purchases a machinery, the cash is being reduced by 10,000. Therefore, the new balance in cash will be 15,000. However, on the asset side, a new item called machinery comes into existence of rupees 10,000. So, as we can see, the asset side will be cash 15,000 plus machinery 10,000, which is equal to the capital amount of 25,000. Thus, the accounting equation proves to be correct. Let us look into another example. Next action is purchased goods from Anil for rupees 1,000. Here, as you can see, even though a rupees 1,000 is given, the worth of the goods being purchased. Since the person from whom it is purchased is given, it is a credit purchase and not a cash purchase, which indicates that you will be having a liability with you to pay ₹1,000 to a person named Anil, who is the supplier of the goods to you. When Aman purchases goods worth ₹1,000 from Anil, a new item called stock is created in the asset side. Stock, as we discussed in the earlier class itself, denotes the goods with the company during any time for the purpose of sale. So here, when Aman purchases goods from Anil, a new item called stock also arises. So, since he is not paying cash on the first date itself, there is no change in the cash, and the machinery is also kept idle. There will be no change in the value of the machinery also. The next thing is an increase in the stock of ₹1,000. Until now, there was no item called stock with us. But now, since an item is being purchased by Aman, there will be a stock also. But as you can see, Aman purchased goods from Anil without paying the cash. Therefore, there will be a liability on the part of the company towards Anil. So, an external liability in the name of creditor is created here. So, a new liability of creditor for ₹1,000 is also created. Now let us equate this and form a new equation. When we form a new equation, we can see that there will be no change in cash, no change in the value of machinery, but a new item called stock for ₹1,000 arises. And on the liability side, a new item called creditor worth ₹1,000 or records, and the capital remains constant. So here, as you can see, on the debit side on the asset side, the items will be cash with ₹15,000, machinery 10,000, and stock 1,000. On the liability side, creditor 1,000 and capital 25,000. Here also, the accounting equation found to be proved. Paid salary ₹6,000. This is another thing. Paid salary for ₹6,000. A salary is an expense from the part of the company towards the employees of the company. As you can see, when you pay salary, it is evident that the cash will be reduced by that much amount. But where will be the next entry appear? Stop. There will be no change in the value of machinery or in the value of stock. Then where will this amount appear? On the liability plus capital side, or on the right hand side, we can see that there are two items only, which is a creditor and the other one is capital. Liability, as we said, is something that you owe to the outsiders. But here, since you are paying ₹6,000, you can't show it as a liability. You cannot show it as a new asset as well, because it is an expense from your part. Then where will it appear? It will reduce your capital. Yes, the capital will be reduced by 6,000. Since an expense is treated Since the expense is treated to affect the capital ultimately it will be shown as a reduction to the capital. Now let us form a new equation after equating this transaction. Cash 9,000 plus machinery 10,000 plus stock 1,000 will be equal to creditors 1,000 plus capital 19,000. Now here also the accounting equation proves to be correct as the asset side total, which is 9,000 plus 10,000 plus 1,000, that is 20,000, is equal to the liability plus capital. That's all for today's topic. I hope everyone understood what is accounting equation and the impact of it as well. For any related doubts and suggestions, please write to the below given email ID. Please like, share and subscribe the channel for related videos.